Good evening, everybody. This is Rich Checkan, Vice President, President of Asset Strategies International. Sorry, I'm a little knocked off my game here. We got a little delay. Our guest, Peter Schiff, is on his way from the airport to his home where he'll be recording tonight. And he's running about 15 minutes late. So Adrian and I are here on time. We're going to start off. We're going to cover a little bit of ground ahead of time. And then we're going to welcome Peter as soon as he's in the house and settled in. And we're looking forward to great dialogue tonight with Peter. But he is coming, so hold tight. In the meantime, I want to do a better job of introducing Adrian than I did myself. Adrian is a long-time friend and a very good one. Lucky to know him. He's native of London, a graduate of the London School of Economics. I always try to say that right. I get flustered. I don't want to say it wrong in front of the man. But brilliant mind. Those of you who've heard him speak, have heard him on the show, know what I'm talking about. He speaks at every news broadcast station you can think of. They all want him. He's in high demand, and I think you know why. He's author of 2 books. My favorite is Investing in Resources, but obviously he writes about international investing as well. He's the manager of Peter Schiff's Euro-Pacific Gold Fund, which is a fantastic fund. As Peter says, he hired the very best to manage it, and I tend to agree with that. He manages funds for us as well. But Adrian, always good to see you. Always good to spend time with you, and welcome this evening.
Thank you very much, Rich. Now, just because Peter's going to be 50 minutes late, you really don't have to overgild the lily there, or over-egg the souffle.
I didn't say anything that wasn't true.
But thank you very much. And so Rich Checkan, we're co-hosts. Rich Checkan, who started this webinar series and is a co-host, is the president and COO of Asset Strategies International. That's a firm that was founded by his uncle, who remains the CEO. I first knew Michael 1980, so that's 45 years, nearly 40. Yeah, it is 45 years. And gosh, not long after that, I first met you.
Yeah, I joined the firm in '96. So
yeah, so I've known both of them, and I've known the firm and the people who work for you for a long time. I highly recommend the firm, primarily for their ethics. Ethics always comes first with me, and then after ethics, you look at things like price and so on. But I recommend the firm very highly. So someone here says they can't see us. There's no video. Do you want to answer that? Well, because Peter's going to be late, we thought we would do the introduction of Peter before he arrives, so we're not sort of wasting time once Peter comes in. I think everybody knows Peter. He's an economist. He's written several books. He's the founder of Euro-Pacific Asset Management, which, as Rich said, they have several mutual funds, including global funds and emerging market funds, as well as a gold fund, which I manage for Peter. And he's also got a weekly podcast. As Rich will tell us, we always, after these webinars, we always send out an email afterwards with a link to the recording, but then we also put in there where you can get the different services, both of Rich and myself, but most importantly of the guest. So we'll have information on the podcast for those of you who don't know it when we follow up. Peter, I think it's fair to say, anyone who knows Peter, and that's probably all of us, Peter is known for his strong views, stated strongly. I think perhaps his most famous call of all is his call on the subprime crisis, or the one he's most famous for, his call on the subprime crisis that led to the credit crisis of 2008. And he was spot on for that. Many of us will remember CNBC laughing at him for his prediction, which was not only wrong, but frankly rude, but he was proven right. So I look forward to tonight's discussion.
Adrian, am I wrong that the Wall Street Journal actually had him on the cover saying he was one of the ones that got it right? Am I wrong?
I don't know, but I'm
pretty sure he was, yeah.
Those of you who know Rich or I will realize that we're stretching this a little bit until Peter joins us. One of the things we thought we would do, it would be a good idea if anyone has questions that you know you want to ask Peter, then why not type them in now so that Rich and I can organize them for when we get to the Q&A time. But we've got a few more minutes. I don't know if Rich,
Yeah, let me
sort
jump
of,
in here if I could first. I want to address this right away. So JK, I'm not sure what the issue is with your video, but I do believe it is on your end. I'm seeing everything fine. I can see Adrian, I can see myself. I've heard from Eric, Brian, Mark, Adam, etc. They all have audio and video. So I think it is on your end if you want to take a look at your settings for the video. Okay. Go ahead, Adrian. Didn't mean to cut you.
yeah, well, and I'm not far be it from me to advise anyone on anything technical, but sometimes there are different cameras. If your computer has more than one camera, you might have to switch over. If you go to that video, there's a little video thing at the bottom left. And sometimes there'll be an option as to which camera to use. That's often the solution. What I was going to say, Rich, is while we're waiting for Peter, why don't you give us a little bit of your experience of how the coin market is right now? And well, I'll let you take it away.
Yeah, no, appreciate it. And it's we don't always get the time to do that with our guests because we want to talk about what they want to talk about. But I know if you're listening to this video, you're probably interested slightly, I would say at least, in precious metals, both the mining stocks and physicals. And you know what we're seeing in the physicals market, if you've been following us, you know that we've got a bull market in precious metals without investors. It's the weirdest thing pretty much anybody in this industry has seen. And there's a few things that kind of point to that. And I don't think Peter's going to disagree with me on this point either, but we can certainly tap into him when he gets here. What we're finding is over the past couple of years, you know, well, let's look at last year. We saw 39 new all-time highs in the gold price. And I'm not keeping track so far this year, but I want to say it's north of 12 new all-time highs already this year. And it's only March, early March. So the bottom line is we have a bull market. There's no question about it. But from our standpoint as a dealer, and you know, we talk to other wholesalers, we talk to other retailers in the industry, we have a feel for what's going on around us. And investors, North American investors, European investors, so the Western investor is typically not buying into this market. They're selling into it. And you know, when our clients are selling back, we have some well-heeled folks that are picking up that bargain metal. And we love those kind of deals. We can actually pay a little bit more to the people selling it. We can sell it for a little less to the people buying it and make a little more money in the middle. It's a win-win-win. But I really encourage people to consider buying here, not selling here. But if you have a need, you have to do that. There's some things that I look at that are suggesting that this is the case. First thing I look at is the gold-silver ratio. Now, Adrian, I think you're familiar. You followed this over the years. Have you ever seen a point in history where the gold-silver ratio has been this elevated for this long? Yet, gold is making new all-time highs, which is usually an indicator that we're at the lower end of the gold-silver ratio, or for those not familiar, it's the number of ounces of silver it takes to buy an ounce of gold. So we start off at a high number at the beginning of a bull market because gold and silver are both low priced, and silver tends to lag behind gold. As both metals move up in price, silver eventually will outpace gold. Okay, so that gold silver ratio, the number of ounces of silver it takes to buy an ounce of gold later in the bull market, comes down. So we usually start off around 80 or higher, and we end up down around 35 to 50 at the end of the bull market as we turn bear. We've been from 127 to 85, and we've been hovering around 90. I think today we're at 88 for year, 2 years, 2.5 years. It's unbelievable how long that's been. And the very simple answer to that is this: who's buying the gold? Central banks are buying gold. Central banks don't buy silver. So they're buying gold. We're making new all-time highs. but that gold silver ratio is not coming down. When investors are buying the gold, they'll be buying silver too. And that's a smaller capitalized market. Silver will outpace gold to the upside, and that number should come down. So that's the first thing that tells me that investors aren't in this. The second thing is the premiums. Premiums for physical bullion bars and coins. So the price over the spot price that you pay to cover fabrication and the wholesaler and the retail dealers margins is really low. It's dirt cheap, and it's been that way for a while. We are just now starting to see the GSR, the gold silver ratio, come down slightly. We are just now starting to see the premiums inch up slightly. But they're still low premiums, still high GSRs, and the investor's not in this. We're starting to see a little bit of a turn right now. So that's what I'm seeing from the dealer standpoint. You know, the phone calls where used to be all outgoing and a lot of left messages. Now we're getting incoming calls with really strong conversations. So, you know, sentiment is starting to turn. At least there's interest where there wasn't before. Does that
Is
help?
it still, are your incoming calls still a majority of people wanting to sell, or?
I'd say it's probably half and half.
Okay.
And it's starting to skew toward buying, but not in a big way yet.
You know, Rich, I should probably remind people who logged in a little, or let people know who logged in a little bit late.
Yeah.
But Peter Schiff, our guest for tonight, is on his way. He's on his way from the airport. He estimated 7:15. So we're looking forward to Peter joining us very soon. And Rich Checkan and I are just addressing a few points until Peter joins us. Please do type in your questions. Thank you for the ones we have, so
Yeah.
we can address these when.
I just
Sorry.
want to add at the end of that, that one of the things we're going to do, I mean, whenever we do these webinars, we always try to do some sort of offer. So I'll cover that right now on the physical side. ASI is going to offer free shipping for any qualifying order. So that's as little as 1 ounce of gold, 1 ounce of platinum, 1 ounce of palladium, or 100 ounces of silver. So anybody calling in saying, hey, I watched the webinar, want to take advantage of the special, you're going to get free shipping, handling, insurance for any qualifying order. And that's to encourage you to do what we think you ought to be doing, picking up cheap metal at cheap premiums right now.
No, excellent. And you know, I'll follow on from your points about we're not seeing a lot of interest from retail investors or Western investors generally, frankly. And for those of you who don't know this, I think what I'm about to say might just blow your minds. The GDX and the GDXJ, two largest gold mining funds in North America, neither one has had a single day of net inflows this year. The GDX has lost 1.97 billion, so essentially $2 billion this year. The GDXJ last had a day of net inflows, meaning on that day there were more buyers and sellers, August the 12th. So it's absolutely true to say that not only are generalists, our retail investors, and generalists also, I mean, small family offices, they will tend to use the GDX or GDXJ to get their exposure to gold. Generalist brokers who don't really know this market well. If a client says, I want to buy gold, they're as likely to buy the GDX or GDXJ. Not a single day of net inflows. What we're seeing with I'm not allowed to talk about the fund per se, but I guess I can say that most gold mutual funds are beginning to see inflows just in the last 2 weeks. And I'll say that we're no different from other mutual funds, but I'm not allowed to tell you what's happening to us. But on our money management side, yeah, it's interesting. I mean, clearly from the time an investor first contacts us and says, I'm interested, until the time when they open an account, for a managed account, that tends to be quite a long time. It's not like calling a dealer and saying, I'm thinking of buying some coins or a mutual fund. But we're beginning to see a little bit, I would say we're beginning to see a turn, no question. But I mean, I do think the indicators to look at are the GDX and the GDXJ. That really tells you what the massive retails and small generalist investors are doing. So Rich, your comment is a bull market without investors. I think that's classic.
There's a couple of follow-on questions. I might as well deal with them right now because I know some of the answers to these. So Adrian asked a great question. How could the World Gold Council do a better job of delivering its message to general investors in the West? That's a fantastic question. It's actually something they are paying attention to. We know this from the inside. We have good relationship with the World Gold Council. They produce fabulous data and research and analysis of the markets. All the stuff I get on central banks, et cetera, all comes from them. They're very good at all that stuff. They've focused on education. They focused on jewelry and other things over the years. What they're trying to figure out is how to do a better job of getting trust back into the metals market. Because if you do studies, what you find out is most people believe that they ought to have physical precious metals in their portfolio. I mean, it's overwhelming when they do surveys that everybody believes they ought to have it, and yet most do not. I want to say recommended is typically 10% in physical metals. On average, historically, I think over 50 years, portfolio allocation is usually about 2%. And right now,
In the US.
And right now, it's 0.5%. Okay. So 1/4 of normal, which is 1/5 of what it ought to be, in my opinion, right? So it's way down there, even though everybody believes they ought to have it. And why, then they ask, don't you have it? Two reasons come up. One, they don't know how, which is just an education problem because it really isn't that hard. You place a phone call and you make an order. That's it. You send us the money, we send you the gold. Two, and this is the part that really is disconcerting as a dealer, they don't trust precious metals dealers, right? So one of the big initiatives that World Gold Council has, and we've been involved in this from the start, is they are putting together a criteria to basically vet dealers. And I don't want to go too deeply into it because it's their initiative, but they're coming up with things that good dealers that do business properly and take care of customers should do. And if they can prove that to World Gold Council, then World Gold Council will let the world know that this is one of the good guys. So that's one of the things they're doing to kind of deal with that. And it's a great question. It is needed for sure.
Yeah, yeah. And you know, over the years, the World Gold Council, it is a strange organization in the sense that you've always got a chairman and a board who rotate. So you don't have the same people there, you know, for 20 years. You do underneath the researchers and so on, but you don't have a top. And so the focus has changed over the years. I mean, I remember when the World Gold Council had a huge focus on jewelry. And at all the conferences I'd go to, they'd have you know, catwalks of models wearing beautiful jewelry, and that was all very interesting and everything. But I'm sort of not interested. I'm not sure what it actually did to promote individuals buying gold.
It certainly wasn't speaking to investors.
No. But I think, as you say, they're doing a good job with the research. It's really a matter of they're not really telling investors why they should buy gold. I think a lot of the studies they've done over the years have been these sort of modern portfolio theory studies of the optimum level of gold in a portfolio for returns and risk mitigation. And I'm not sure that the ordinary investor really goes with that. It's too mathematical and too theoretical in my view. Anyway,
I have a question that's perfect for you, Adrian. I'd like you to answer it, and then I'll just go ahead and write the answer down because I want to know too. When will gold break above 3,000? Can you give us the date, time?
well, I'll say it. Yeah, I know the answer to this.
Oh,
It's in the future. You know, look, I wouldn't be at all surprised. So I was asked this on an interview last week, my prediction for the year, and of course I gave the normal answer that you don't predict time and time and price at the same time. But I mean, I wouldn't be at all surprised if we sell 3,500 this year. And the people on the panel with me all thought that was an outrageously high, but I mean, I think that's a conservative estimate, frankly. If you look at what gold has done in the last 2 months, and you just say at some point in the next, what are we now? We're March. So in the next 9 months, could gold repeat that performance? Then you're at 3,400 quite easily, in percentage terms, not in dollar terms.
Well, if we get investors involved, I think it's a foregone conclusion. And what I would say is, which time breaking 3,000, the first, second, third, fourth, or fifth? Because I think it's going to be a psychological level that's going to take several attempts before it finally breaches and holds. But when it does, boy, I think you ought to be holding some already.
Well, yes and no, and I'll disagree with you on that, because I would normally say that very strongly. But $3,000 gold is a hurdle, a big round number for US investors and for retail investors who are not in the market. Is it a big round number and a hurdle for the Chinese central bank? I don't think so. Or the Polish central bank, or the Kazakhstan central bank. I'm not sure that they're so concerned about nice round numbers in the US.
That's a good point.
So it may not be such a hurdle. I'm going to give Peter a call. Is that okay?
Yeah, that's fine.
So you carry on. Are we getting new people joining us? I just want to make sure that everybody who joins late knows that Peter is joining us. He's just running late. Hello, Alex. How are you? I see Alex. Let me just call Peter.
Okay. All right. So I'll continue to move down some questions. I see questions for Peter. We're going to hold them for Peter because he is still coming, unless something's changed, and I don't believe it has, because we'd know. Adrian's got him on speed dial there. Let me see. How much are the gold premiums today? So this is kind of a follow-on to what I was talking about, the physical market. Jim, thank you for the question. The premiums depend obviously on what you're buying. For instance, just 2-3 weeks ago, the gold eagles, which is the most popular coin in the world, the premium was actually lower than the gold maple leaf, the second most popular coin in the world, which is unheard of. Gold eagles are always higher in premium than a gold maple. However, 2-3 weeks ago, it wasn't. That has changed. So that's back up, going toward more normal levels. There have been moments where we've seen junk silver, so pre-1965 US quarters, dimes, half dollars that are 90% US silver content. We've seen points where those were wholesale levels were negative to us to buy. Unbelievable. Those are all things of the past, but they're not much above those levels. So we're still at lower levels. I can't go through every metal and tell you what the premium is, and I don't know it sitting here talking to you without the board in front of me, but they are absolutely lower than normal and worth considering. And Adrian, got an update for us?
Yeah, he's just pulling in, and he's just going to get his camera working and everything. So any minute. Great. And I'm just wondering, Rich, I'll say this in front of everyone, but do we want maybe Peter to give a brief overview and then try to get to the questions? Because there's some interesting questions, and I'm always wanting our audience to hear answers to their questions rather than hear answers to our questions.
Yeah, there's no question, and I know what we were going to ask, but I'm with you. Rather than guess what's on your minds, we rather just ask what's on your minds, and you're so kind to share that with us. So yeah, I think let Peter start off, tell us a little bit what's on his mind as the most important thing to him as our guest, and then we can go down the questions that the attendees have asked.
Okay, super.
I like that.
Okay, well, it should be any.
Now, I know he does his podcast till like 1:30 in the morning. We're not going to do that to these poor people here tonight. We're still going to end as best we can around 8:30. So we're going to have a good hour with Peter. And I think the questions are great.
Let me ask a question. And when I said earlier that the GDX and GDXJ, neither one had a single day of net inflows this year, did anyone know that? I mean, if you knew that, just put a yes or something unless there's 100 of you. Because normally when I tell people that, nobody knew that. Nobody knew that.
I don't see anybody jumping in.
And you're organizing the questions, are you?
Yeah, I'm looking. Okay, so Galshan says yes, he was aware. Adam was not aware. Thank you guys for sharing.
Okay, okay.
So
Yeah,
for 50-50 on a very small scale survey.
Yeah, but I didn't ask people who didn't know to answer. Okay, so
Didn't know, but was not surprised. Anonymous. Yes, I watched the GDX from John. So yeah, a mix.
okay, okay. Oh, wait a minute, here's Peter.
All right.
Hi.
All right. He's coming, folks.
Oh, Lordy. Yeah, but do you see this link? Right.
All right.
You don't see an email from Zoom?
Okay. So if I hear the conversation in the background, if you guys bear with me, I am actually going to switch over to Zoom and I'm going to try and resend that link
Okay,
if I can.
he's got it, he's got it.
He's got it. Okay, good.
Yeah, he's got it.
He's going to have to talk fast because we've got questions piling up here.
Yeah, I'll just ask him to give a brief overview of what's
Okay.
his mind, and then yeah, that's a good idea.
Yeah, we're in your
It
good
was
hands.
my idea, so it's obviously a good one.
There he
Hi,
is.
Peter, how are you?
Hey, okay. How are you guys?
How was the flight?
Flight was fine, but I gotta stop flying into Kennedy. It's so it took me like a half hour to walk from the gate. You know?
I mean, to be honest with you, I'll say this as an Englishman. Kennedy is a disgrace to what's supposed to be the greatest country in the world.
Just a long, I mean, I should have just done Westchester, but I wanted to go first class. And the only one that goes into Westchester is JetBlue, but I should have next time I just got to do JetBlue.
I've flown JetBlue, Peter. It's really not that bad.
Yeah, should have been. I fly private so much now. I don't really like any of this crap.
Well, Peter, thanks for joining us. I know it was hectic tonight, but we're all happy to see you. I think Adrian's going to start us off with a little bit here, and then we have questions piling up. So I think that's where
we've already done the introduction, Peter, and
put on my glasses to hide. I got an infection in my eye, and in fact, if I get a call from the pharmacy, they're supposed to call me because I forgot my antibiotic prescription, so I got to get a new one and go to CVS.
Okay. Well, why don't we just kick off with a general question, Peter, which is, just let us know what's on your mind right now. What are you looking at? What are the most important things that you can see? And then we'll jump into the questions from the audience.
Well, I'm just, looking for confirmation that the stuff I've been, waiting for, preparing for, warning about for, over a decade, maybe 20 years is, going to happen. I mean, and I made a name for myself predicting the 2008 financial crisis, but my predictions of that crisis always assumed that that was just the opening act of a much bigger crisis that was going to follow. And I'm really surprised that this many years has gone by and we've been able to kick the can down the road. But, the underlying problems are so much worse than they were building up to 2008. And so when we finally have this crisis, it's going to be much worse. And now it may be blamed on Trump. Maybe now the excuse to say it's all because of the tariffs and Doge or whatever. And that's not going to be the cause of it. Yeah, the tariffs are a bad idea. Doge is a good idea, but the problem is they're not cutting nearly enough. And it's more of a distraction from the fact that Republicans are increasing spending in the House and the Senate while they're pretending to cut it at the White House. But I think that we may have stopped the can kicking with what Trump has been doing to try to say that the world has been screwing us over, and now they got to pay, and they can't live off of our economy anymore. The reality is that America has been living off the global economy for generations now. They supply us, the world supplies us with goods we don't produce, and they loan us money that we don't save. And our entire standard of living is predicated on this continuing. We're dependent on imports. We're dependent on foreign credit. And it's great to say we should make all this stuff ourselves, but the problem is, we would be doing it. And the reason we're not is because, we don't have the capacity. If we tried to reach the capacity, it would be a monumental investment that would necessitate a massive recession to finance it. We'd have a stock market, bond market, real estate market collapse. GDP would contract dramatically because everyone would have to stop spending so we could save money, so we could finance factories and infrastructure and supply chains and all that. And in the meantime, the cost of everything would go through the roof. And so that, we may be headed there with this trade war, the dollar. So I'm watching the dollar to see if we really get a break. I'm watching the bond yields in Japan and in Germany. I think those are really the key, because I think if rates really start to go up over there, that's big competition for treasuries.
Yep.
And if there's an unwind of the yen carry and all these leverage bets in U.S. markets, and I've been in the market for a while. This is really the first time I've seen this kind of decoupling or divergence where, our value fund or international dividend payer fund is up 50 this year. The S&P is down, the is down. In Europe and Asia, rising market is falling. And that hasn't happened in a long time. And the dollar is falling as the stock market is falling, and we're not getting a bid in bonds. We've had some big down days in the last week, and people haven't bought treasuries. Gold is looking very resilient. 2,900 is the support now, or it can go a little bit below it. But obviously, there's a psychological resistance at 3,000. I don't think that's going to be much resistance when we get up there. But it's clear that this time it's different in that the dollar is not the safe haven. Treasuries are not the safe haven. It's gold. And I think we finally got a bursting of the Bitcoin bubble. Donald Trump refused to cave, at least to the demands that the U.S. government buy Bitcoin. He's agreed for now not to sell the Bitcoin we have, but no, we weren't selling that anyway. I thought Biden should have dumped it as the last thing he did before he left office. It would have been one good thing he did, would have been unloading all that worthless Bitcoin, but he kept it. And now, Donald Trump was able to hold on to it. Maybe by the time there's president, it won't have enough value to even be worth selling. But at least if they're not going to buy anymore, so Bitcoin is going down. It's a bear market. So, gold's got the stage all to itself, as far as I'm concerned there. These gold stocks, I think that's, I've been recommending gold stocks for a long time, so it's nothing new for me to say you should buy gold stocks. But you really like gold stocks right now, and I like the technical action. I like the way they're building this up. Nobody owns them. Nobody's talking about them in the mainstream media, and fundamentals are phenomenal. All they have to do is report, some decent. I got, Endeavor Silver, one of my biggest positions, was up, maybe it's up 30% in the last 2 days. And I think that's kind of like what can happen to a lot of these stocks. And I think eventually the whole sector could be up 50% in one day. I don't know. It's just going to be a big catch-up move where people realize how cheap these stocks are and everybody wants to buy them. And none of the people that own them want to sell. So, I think the move from 3,000 to 4,000 in gold which I think will, could be just faster because it's a smaller percentage. But I think that move could be the move that really ignites these gold stocks, and people
Yeah.
forget about, gold's never going back down to 2,000. Probably won't even go back down to 3,000 when it's at 4,000. But, they have to re-rate these companies. Wall Street has to completely change the way they look at these stocks. They have to stop assuming that the price of gold is always going to go down and the cost of mining it is always going to go up. They have to start putting a realistic valuation on these stocks. And I think portfolio managers are going to start buying them. Nothing else is going to be working that they own. So that's what we really should be focusing on. I think, people should be buying. I mean, I would be buying a bunch of them myself if I didn't already own so many. I've been buying it for so long. I bought a lot more on the last big dip. I mean, that's kind of been my personal pattern is I buy the sell-offs, and there's been a lot of sell-offs. But when the market's starting to rally like it is now, I don't really buy anymore. I mean, I got so much gold stocks. But most people don't have any.
Yeah, but truth, Peter, is, I mean, the juniors, the intermediates and the juniors, with few exceptions, like Bissell you mentioned, are still remarkably undervalued, and they just haven't moved at all. What a lot of people don't realize is you look at the XAU over the past 12 months, it's up almost 40%. That's the XAU. That's not chicken feed, but 40%. And the S&P is up less than 20%. So the XAU is more than double the S&P. And as you say, that's not the front page of the FT or the Wall Street Journal. It's not what they're talking about on CNBC.
But meanwhile, Adrian, given how much gold has gone up during that time, the XAU should have gone up more.
Of course. I'm not saying that. I'm just saying that even though they're not doing what we expect them to, they're still up more than the S&P, and it's just not getting anyone's attention. No one is looking at it.
And honestly, nobody pays attention to gold, anything at all. I mean, so far this millennium, gold's up over 900%. Nobody would know that. The S&P, the NASDAQ, the Dow, they're up what, 200 to 300%, 290 to 300%.
Yeah, when I think about it, when I first started getting my clients to buy gold, it was just under $300. And so it's literally 10x. And you'd think, okay, with $3,000 gold, I mean, everybody be buying gold, but no one's buying it. It went up here without anybody participating. It's just the central banks are able to buy it, and they're lucky that the public has been too dumb to buy it. Otherwise, they'd have to be paying much higher prices. So the central banks are happy to buy as much gold as they can before they have more competition. But, this is, like for the first time, really, in the 20 years more I've been doing this, that I'm actually telling people, look, $3,000 gold, I think gold's going up. But at this point, if you haven't bought any gold, there's no point in buying it at $3,000. Buy the mining stocks. I mean, that's what you got to do, because you haven't missed that boat. And not that you've missed the gold boat, but the move from 3,000 to 4,000 is only about 33%. But I think at a minimum, you're going to get maybe a 5x or more on the gold stocks. So right now, that's what you got to do. It's like turning back the clock, because the gold stocks are not priced for $3,000 gold. They're priced for $2,000 gold.
No, absolutely.
If those stocks now, and then when gold goes to 3,000, if those stocks go up 4 or 5 times, then you can take some profits and buy the physical gold then, right? And have the gold stocks for free. So that's how I think people should be entering the market. Although silver is still ridiculous. Now it's above $33. So looking at a choice between $3,000 gold or $30 silver, I mean, you're talking almost 100 to 1, like over 90 to 1 ratio. I mean, that's ridiculously cheap for silver. And I think that the silver story and the gold mining stock story is the same thing, because central banks don't buy silver and they don't buy mining stocks. They just buy gold above ground, refined in big bars in a safe. And so nothing else is getting bought. And so all that stuff is cheap. And so that's where you have to go right now, where the central banks aren't buying, because that way you can still get the bargains.
I tend to agree with you, depending on what the purpose is. So if your purpose is profit motivation, And it's not everybody's motivation, but if it's profit motivation, can't argue against silver, can't argue against the mining stocks. If your goal is wealth insurance and you don't have it yet, buy the $3,000 gold. I mean, there's
Well,
nothing
I
better than
just
short
think,
purchasing
yeah,
power. Yeah.
yeah, I just think that the risk reward is so phenomenal, skewed. It's a very big asymmetric bet. I don't see a lot of downside risk in these stocks,
Right.
but the upside is enormous. And so, I'd rather have somebody buy these stocks, unless they're like so super risk averse, like I can never afford to lose, but you could buy gold at 3,000 and you go to 2,700, 2,800. So you still have downside in gold. So I would rather take the extra upside, buy the mining stocks, and sell the next big rally. So I'm not saying just stay with them forever, but you get a triple, quickly in these stocks. You can sell a third of the position and buy back the gold then, right? Even if gold has gone up, it doesn't matter because what you're selling has gone up so much more that you can really reduce the cost of your gold by rolling in the profits of your of the mining stocks. And you don't have to buy the juniors. You could just buy the most conservative balance sheet blue chip companies. Or our fund is pretty well diversified in the Europe Pacific Gold Fund. That you have to, it's not like the stock's going to go to zero and I lost all my money.
Can I jump in with a question? One of the questions, because it
Yeah.
follows on from what Peter's saying. An anonymous attendee says the mine has been a disappointing. So what is going to change that? What is the catalyst for the gold stocks, do you think?
Well, I think that they're going to make a lot of money now based on the gold price, the exchange rates. Because if you look at where gold is mined, those currencies are very low right now historically. The Aussie dollar, the rand, the Canadian dollar, these currencies are very low. So the gold price has made a much bigger move up in terms of those currencies than it has in US dollars. And so, that reduces the production costs of, labor and local expenses. And oil right now, below $70 a barrel with gold at 3,000. This is about as cheap. You have to throw out a few months COVID because oil went negative. But outside of a few months in COVID, oil has never been this cheap, like in history, even when they first discovered it. Right. So in terms of real money, how many barrels of oil you can get with an ounce of gold? So that's a big cost. So mining has gotten extremely profitable. And so these companies are going to make a ton of money. Wall Street has got to notice that. And in the meantime, if Wall Street doesn't notice, these companies are going to take all that money and buy back their stocks. So if Wall Street isn't buying, the companies are going to be buying their own stocks and they'll be raising their dividends and then they'll start buying one another. So, so it's going to happen. I think that the question is, what is the catalyst for the public or the institutional money, the endowments, the hedge funds, what gets them to wake up? I don't know what that's going to be. My guess is it's going to be price. At some point, the returns are just going to be so good that they got to get in on it. I mean, that's what happened with crypto. Everybody buys, the Bitcoin is nothing. It's all garbage. But once it went up so much, they just couldn't resist. They had to get on it. Kind of a similar thing, not that the gold stocks are garbage, but it's like at some point, the naysayers are going to say, you know what, there's something here, right? I can't just sit back and watch these stocks double or triple again and have no exposure. So you're going to start, and then they're like lemmings on Wall Street, because if Goldman Sachs or some big company starts allocating to gold, now everybody's got the green light to do it. Like nobody wants to get out on a limb and be the first one to do it, because if it doesn't work out, it's like, what are you, an idiot? Why did you do that? But once some other firms are doing it, now you got cover to do it too. Now it's like, well, if I lose money, well, everybody else was doing it, right? So they wait. But once it starts happening, it's, and these stocks are so damn cheap. And even if you took all of these gold companies together and added them up, the combined market cap isn't even a decent Fortune 500 company, right? It's like, I mean, it's nothing, right? I mean, you have stocks in a single day lose more than all the gold stocks combined.
Right, right. No, it's crazy. Rich, do you have a question?
Yeah, there's actually a bunch of them building up here. One kind of goes along this vein. Given the U.S. stock market seems to be very vulnerable now, would it be fair to expect that even if the S&P drops, gold miners will likely drop first, are likely while likely to drop first, are likely to recover quickly before the stock market?
Yeah, that's what happened. Like if you look at the big sell-off that we had on Monday,
Mhm.
where gold was down maybe about $20, and the Dow at one point was down 1,000, closed down about 800. The Nasdaq was down almost 4%. The gold stocks got killed. The GDX, GXJ were down 4%. There were some stocks I looked at. IM Gold was down like 9%. Like what the hell? Why is that? Right. The next day, all these stocks recovered 100% of their losses. In fact, they were ahead, and gold just rebounded about $30. So it was up a little bit for the 2 days, but the overall stock market didn't rebound really much at all. In fact, the S&P were down again. So they added to their losses, but the gold stocks came back. So yes, when the market is really tanking and everybody's just selling everything, the gold stocks get caught up in it, but then they recover right away.
Right.
But at some point, they're not going to get caught up in it. You're going to see the stock market tanking and the gold stocks going up on the same day. But, the problem was gold went down. So gold probably has to go up. But if we can get gold making a decent rally on a big down day in the stock market, the gold stocks are going to follow gold higher. They're not going to follow the stock market lower. And of course, when you're selling your stocks, you got to do something with the money. And so if you see, like you're looking on your screen and the only thing that's green is a few gold stocks, people are going to be like, hey, maybe I should buy those. If they even have them on their screen. Most people probably don't even have them, but that might be the only green that's there. And because that's going to be the safe haven. It's not treasuries, because treasuries are the risk asset right now. They're like the subprime debt, because we got a huge fiscal, bomb going off, and inflation is the problem, stagflation, and treasuries are not a safe haven from inflation. They're a big casualty of inflation. So I think gold is the safe haven. And then if gold's going to go up, then these gold stocks are going to go up more.
Well, I like to remind people of what happened in 2008. The gold stocks actually peaked before the S&P. The gold stocks bottomed in October, and the XAU had actually doubled in 6 months before the S&P had even bottomed. So yes, when there's a sell-off, they'll go down. But I think that was Alex who asked the question.
Yeah, it was Alex. Yep.
But they will bounce back. History tells us they will bounce back much sooner.
Gotcha.
Yeah, because they really shouldn't get sold. It's like this, throwing out the baby with the bathwater.
But there's margin calls, right?
Yeah. Or whatever. Everything just gets everything. And I think, not just margin calls, but I mean, it's just like everything. When they start going down, people just panic and they want to get out, and then people see them going down and they don't want to buy them, but when their emotions cool off, by the next day, they're like, shit, I should have bought. Let me try to buy. But in the middle of the sell-off, people are afraid to buy and everybody is panicking. 24 hours goes by. It's not the end of the world. People get a chance to sleep. Oh, okay, let me buy those stocks. Next thing, but they cap up really quick.
Good point. Motion loses a lot of money. So I want to transition a little bit here. Mace came in, says, with the gold oil ratio at record levels, and I think you touched on this, Peter, earlier, and with no end in sight to foreign central bank buying, is the thesis playing out as was expected, or is this rising gold price different this time and it's not a sign of a failing currency? US CPI came in cool this morning. Can you discuss how the creation of too much currency leads to rising commodity prices?
Yeah, well, first of all, the CPI wasn't cool. It was just, not as warm as they thought it was going to be. It was supposed to be up 0.3 and it was up 0.2. But I mean,
still up.
If you annualize 0.2, that's still closer to 3% inflation than 2%, right? 0.2 every month. But it's not, because we've had 0.4, 0.5s. I mean, we're trending up. I mean, it's not going to be every month isn't going to be higher. We'll see what happens next month. And they can revise this 0.2 up to 0.3. But one of the reasons it was 0.2, that's not going to stay like that, especially with the dollar falling. The dollar index yesterday, I think, hit its lowest level since October. So the entire Trump rally was lost, and now we're lower than we were when Trump was elected. But no, I think that the first question was about this. Well, the central. What was it? I don't want to not answer it correctly. The first part of the question.
Well,
Yeah.
is it playing out as we expected?
No, but there
Exactly.
was something else to it about the central banks.
Well, with the central banks buying, it says, is the thesis accurate? Is it playing out as expected?
Oh, no, now I remember it. You said, well, is it not because of a weak dollar? It's because the
Exactly,
central
or a failing
banks.
currency. Yep.
Yeah, no, but that is precisely why the central banks are buying. I mean, you have to ask yourself, why are they not buying treasuries, and getting that 4% yield, right? Because, the yield was nothing for a long time. And now they can buy treasuries and get 4%. Why are they not doing that? Why are they buying gold instead?
Not enough.
And that's because they don't trust the dollar. They don't trust that 4% enough to cover their lost purchasing power. And so they don't want to buy treasuries, they get that percent and own gold. And so far, all the gold that these central banks have been buying over the last few years, they're way ahead of where they'd be if they were in treasuries, right? Gold is kicking the crap out of U.S. treasuries. In fact, treasury prices have gone down. And then now the dollar is going down. So people are way better off in gold, and you don't have the political risk, because when you have a bunch of U.S. treasuries, you got to worry about pissing off Trump, right? Or pissing off the next president who decides to sanction you, right? So if you don't want to be exposed to that, you own gold, because now you're sanction proof. I mean, if a sovereign nation owns gold and stores it in its own vaults within its own borders, then it's got it. Nobody can take it, unless they get invaded by the military. But, that's not what we do. We just slap on a sanction. And so, boom, your dollar reserves are frozen. They're confiscated, right? You're locked out of the SWIFT system. To say that nobody can buy your gold. If you need it, you'll market that gold, right? You'll always be able to get rid of your gold. China will take it. They don't give a damn about our sanctions, right? So I think the fact that central banks are the big buyers is an indication. And, it's not just that the central bankers can read the writing on the wall. They wrote what's on the wall. Exactly. That's why they know
better than anybody what a mess they made, don't they?
So, I mean, they're in on it. They know shit, so it's like,
Insider
it's almost like, if you look at a stock and there's a lot of insider buying, right? Well, these guys must know what they're doing, right? And now if the insiders are selling, it's like, holy shit, what do they know that I don't know, right? The guys with the most information are selling. So the guys that run these central banks are the insiders in the monetary system, and they're selling the fiat currency to buy gold, right? So what do they know, right?
Yeah, should be light bulbs everywhere.
Do what they're doing, right? Don't do what the Gen Xers are doing, the 20 or buying what kids are doing. Oh, really? I got to take my financial advice from kids?
Hey, Peter, let me ask you something, because the other side of the coin of central banks buying gold, of course, is that they're diversifying away from the dollar, and there's going to be fewer and fewer central banks showing up at any long-term auctions. I think it's really worth emphasizing that long-term treasuries right now, in my view, are just probably the worst place you could put your money, because you think it's safe, but they're not going to be safe. I'm not talking about 3-month, 1-month, 3-month T-bills. That's fine for a parking spot. But to be looking at buying 20 and 30-year treasuries, I think is just an awful mistake for people to be doing, because they're simply not safe. And that's why the Treasury isn't issuing long-term bonds. They're not issuing long-term bonds because they know the auctions would be complete failures.
Well, they don't want to lock in long-term rates here either. They're hoping they'll come down, in
Yeah.
the future.
Well,
So-
that raised, sorry, go on.
Go ahead. I was gonna shift gears here, to one I think is, one of Peter's favorite asset classes, and that's crypto. So I've got a question here from, Robert. He says, I just attended a 3-day conference, Abundance 360, led by futurist and serial entrepreneur, Dr. Peter
Yeah.
Diamandis.
You're frozen.
Froze up?
Yeah.
Okay.
Yeah,
we're
you're
getting to
breaking
the
up.
meat. Yeah, getting to the meat
Oh, there
here.
you are.
Says the meeting focused on AI, but also included several talks by experts pushing hard on crypto as the future. These are seemingly very smart people, and I was stunned. Some have 50% or more of their investable assets in crypto. I remain a skeptic, but I must admit I'll consider investing some risk capital in this market. What do you think about crypto and those kind of numbers?
Well,
I
if you
think I
don't
know.
what I mean, if you're familiar with me, you know what I think of it. I've already, mentioned my sentiment on this webinar.
Yeah.
But no, I mean, I think it's the ultimate in fool's gold. I think it's a huge Ponzi pyramid chain letter. It's just dressed up, digitally and uses a blockchain, but it's the same, time that's going on, for a long time. I mean, I'm sure somebody did it before Ponzi, but they call them Ponzi games. But no, put any risk capital in crypto. Put it in the mining stocks. I mean, if you have risk capital, that's where you go. And in fact, I don't think there's that much upside in Bitcoin. I mean, yeah, Bitcoin is, 83,000 or whatever. It's been as high as 109,000, almost 110,000. Could it go back up there? Could it go to 120,000, 150,000? Maybe, maybe not. Maybe it's topped out and it's never going back up there. I don't know. Eventually, I think it's going to, approach zero. But how much upside is there really? All these guys are pie in the sky, $1 million Bitcoin, $5 million Bitcoin. It's all nonsense. This is all just fantasy. And it's all being touted by people who are talking their book and have a lot of skin in this game, including on leverage. And they just got to sucker people in with these pie in the sky forecasts. So I don't, know that realistically you could even double your money in Bitcoin from here, but let's say you could. On the other hand, Bitcoin can go to 20,000, 10,000, 5,000 pretty easily. It could be there by the end of the year. So you have a lot of risk and really not that much. Whereas in these gold stocks, I think you actually have less downside risk, quite a bit less. I mean, I think they have less of a chance of going down by 50% than Bitcoin does. On the other hand, they have a realistic chance of going 5 or 10x, maybe more. And I think that Bitcoin's chance of that is very, very minimal. I'm not saying it's impossible that it could happen, but I don't think it's a good bet. I think the probability is so low that if you actually, factored it in to what it would be worth to gamble on it, the expected value is not there. These mining stocks are where you want to be. So if you want to gamble, if you want to speculate, that's where to go. And that's, I've got no money in crypto other than, as a joke, I established a strategic Bitcoin reserve and I invited people to contribute to it because I said, I've done a reserve just like the US government. I'm going to acquire Bitcoin as long as I can do it at no cost to myself. It has to be budget neutral, no incremental cost. And so I says, my strategy is, I'm going to ask for donations. So here's my wallet in there. But I don't really consider it because I've told everybody I'm just going to hold it till it's worthless.
Yeah.
But and that also highlights, how nonsense it is to have a reserve that you can never sell because they're saying we want to hold Bitcoin as a reserve, but we can never sell it.
Yeah.
So it's no matter what happens, we have to hold on to it.
Going back to silver for a second, if we may, we've got a question from Norm Olson. Good evening, Mr. Olson. How are you and the family? I hope you're doing well. So Mr. Olson says that Eric Spratt has recently suggested that silver is underpriced due to manipulation. So do you agree with that? And what do you think generally about manipulation of metal prices?
Well, I don't know if it's because of manipulation or not. I mean, maybe it is. Um, but there are also a lot of, reasons that are not as nefarious that could explain, because in the market, you have anomalies all the time. I mean, some stocks to me are some are priced, and why is that? I don't think they're being manipulated. And the buyers are buying what's expensive and they're selling what's cheap, and so there could be some more mundane explanations for why silver is cheap. But regardless of the reason, even if it's manipulation, especially if it's manipulation, it can't stay cheap forever, right? You can't suppress it, uh, and eventually it's going to go way up. I mean, look, the biggest manipulation in our history was when we were still on the gold standard up until 1971, and throughout all the 1960s, we maintained the fiction that gold was $35 an ounce. I mean, that was being manipulated. The government was saying gold's $35 an ounce as they kept printing money. And so they kept artificially suppressing the price of gold, up until they couldn't suppress it anymore. They tried to, notch it up. They got up to $42, but then they said, screw, obviously it's not high enough. And we went off the gold standard. And in just what, 9 short years, gold went from 42 to 850. Those years, you got a big overshoot in the price of gold. It finally settled down around 300 or 400 after that big spike up there. So I think eventually, if silver has been manipulated, it's going to blow up, and it's going to. So you just need to buy it, and put it away, because it's going to go a lot higher. You remember at one point, an ounce of silver was pretty much $1. That's what it was, because a silver dollar was almost an ounce of silver. That's what it was made out of, right? It's like 80% or something, but it was almost a dollar an ounce was the price of silver. So it's gone up, 30 times. Gold's gone up 100 times, because gold was $20 an ounce for 120 years, 130 years. Same price, never changed. Until the government, we got the Fed, and then we started printing money.
Sure.
But gold has gone up a lot more than silver. But, silver's got a lot of catching up to do.
No question.
Can I follow up with that, if I may? We talk gold, we talk silver. Marcus Canyon from sunny Sydney wants to know what you, Richard, and Peter both think about platinum and palladium. Are they just plain industrial metals at this point, or do you think they'll move with gold?
Yeah, I've been looking at platinum for a long time, and platinum I think is still below $1,000, right? I mean, it's been like
It is. It just got above palladium for the first time in a long
yeah,
time.
it's
Still
not
below
it's
1,000.
990. It's 995. Yeah, palladium was above it. Yeah, now palladium is 981. But I remember when platinum was, palladium was like a couple $100 an ounce, or 100, 150, when platinum was over 1,000.
Yep.
But platinum was always more than gold. If gold was, 600, platinum was 700, 800. Platinum was always more expensive than gold. That's why, the Platinum American Express card is more, prestigious than the gold card. Everybody who's a platinum, that's always been like higher than gold. And now, so 3 times the price of platinum, triple. So silver is gold. I'm buying silver more. I haven't been, really telling people to buy platinum. But I have a feeling that it's cheap. And, one day it may be higher than gold again, but gold's not going down. So that means platinum has to go way up if it's going to get back above gold. But I don't know if there's been some shift in the industrial demand, but it is a precious metal. There's a lot of qualities that platinum has. But
Yeah,
I don't, and there's only a couple of platinum mining stocks. I'm not sure how, Adrian, how much of the major gold miners that are mining gold, how much platinum do they end up getting out of the ground?
Well, very few companies do any platinum at all. I mean, Sibanye does, the South African company. You know, Franco's got a royalty on some platinum. But I mean, basically, with most of them, you could buy the top 10 gold miners and you're not getting much platinum at all.
But you don't
So you
even
have to
get
go
it
to
like as a residual. Like a lot of times you're mining gold and you get some copper, you get some
yeah,
silver.
very little, very little. They seem to be separate
Deposits.
deposits. Yeah, separate deposits.
yeah.
So I mean, certainly you get a lot of copper, you know, as we know.
Yeah, I mean, and look, there's got, if ever a big run in demand for platinum, I'm sure we haven't been developing much platinum over the last 20 years. You know, they probably
No,
haven't discovered any platinum anywhere.
So the big thing for me on platinum and palladium are they very much industrial metals. There's no two ways about it. They're really never have been used as monetary metals. I think gold and silver are getting all the attention. They're getting all the rise and the bump because the problems that we have are monetary, right?
exactly.
So you need answers to monetary issues, and that's gold and silver, gold primarily, silver secondarily. Yeah, I think platinum has tons of room to the upside for its fundamentals, but it's an industrial metal at the end of the day, and I think gold and silver are the story here.
Yeah, I agree. Do you have a next question, or shall I take it?
Yeah, if you've got one lined up, there's a
Well,
couple
there's
that
a
were
good
asking about stock
question.
tickers here.
There's a really good question from someone with a wonderful name. That's Adrian Cantwell.
Adrian?
Adrian Cantwell, great name. So he's asking us about the extended delivery times for gold at the Bank of England. Is that a canary in the gold mine, or is it a non-story?
I think it's a non-story.
Peter?
I didn't hear that one.
Oh,
What was
sorry.
the question?
Adrian is asking about the delivery times for gold at the Bank of England. Is that a canary in the gold mine?
Well, you know, I've read or heard about a lot of the physical movement of gold that's been going on across borders, and at the London Metal Exchange or the COMEX, what's been going on. And yeah, I mean, it's possible that there's something there, that, you know, that there's a run on physical. I don't know if it's all just about trying to get in front of tariffs that might, be imposed on cross-border movements of metal, or are people just wanting physical metal now that we're trading futures contracts? Do they want to get the actual gold and silver now, or predominantly gold? And that could be a big thing if we're starting to get, you know, the traders, the speculators wanting the actual metal instead of trading paper claims on the metal. But who wants to sell one? You don't have to have any gold. You can short gold without having any gold. But if you actually want to buy gold, the guy selling it to you has to have it. He has to be able to deliver it.
Right.
And in fact, if you own a futures contract, you have the right to demand delivery. And then somebody who's on the other side could be assigned a delivery notice that says, hey, you know, by the way, you need to send, you know, you're short 10 contracts. You have to send 1,000 ounces of gold, you know, 10 100-ounce bars. You know, here's the address. We're, you know, when are you going to, you know, you got to deliver by this date. And shit, I don't have that gold. I got to go buy it.
Yeah.
And so that could be a real run at some point.
Yeah, I think
the
dealers
honestly,
Go
sorry.
ahead. I was going to say, I think the dealers are making more out of it than they ought to at this point. I think it was really a movement of metal to get ahead of tariffs, and that depleted supplies in London deeper and faster than they ought to have. But as I understand it, that most of those are rectified at this point.
Yeah.
I think it's kind of a non-issue. But
No, I agree with you. I think it's a non-issue. And remember, not only did this start right before Trump got elected.
oh yeah, they were trying to get it here before he put the tariffs in place,
were
not
trying to
even
get
knowing
ahead
if
of
they'd be
non-tariffs.
effective. Yeah.
And then, of course, you started to get premiums in New York gold over London gold. So that premium went over $50 an ounce at one point. So when you've got a big premium, either it was $30 for a lot of the time, but it got as high as 50. then you start getting people just moving the gold for an arbitrage. Because if you've got a lot of gold, it makes sense to move it and lock in that premium. So
Yep.
I don't think there's anything to it, frankly. And as for the delivery times at the Bank of England, remember, at the Bank of England, it's allocated gold. It's not non-allocated. So if I, Adrian Day, say to the Bank of England, hey, I want my 100-ounce bar, they've got to go and look for my bar. I don't mean look, but they've got to get my bar and bring my bar up. So when you have when you have a lot of people asking for their gold at the same time, then clearly you're going to have delays. And the last thing I'll say, if I may, remember that when you ship gold from the LBMA to the COMEX, you have to get it refined first. It has to be melted down and refined. And that's where the real holdups are. They're shipping the gold from London to Switzerland to refine it into the COMEX delivery bars, 1,200-ounce bars as opposed to 400-ounce bars. And that's where the real holdup is, because there is a literal physical limit to how much gold can be refined in a refinery in a 24-hour period. So I just think it's a non-story at the moment.
Mm-hmm.
Rich, do you have a question?
Yeah, I was going to say real quick, and I don't know if these are the ones we want to hit at this point, but a couple folks were asking about stock tickers. One was, where do you think AEM is going to be at year end? I don't know if you want to deal with that. And the other is, do you think the XAU rally is solely based on central banks? Which I think the answer there is no. But
right.
Yeah, well, the gold stock is not based on central banks, unless you want to say the gold rally is based on central banks, and obviously that's helping the money stocks. But I obviously I think there's some people that are coming into the market, and some of the selling has exhausted. Agnico Eagle, made a new high, got above 100 the other day. But when their earnings came out, I thought their earnings were pretty good, and the stock got killed. So a lot of these stocks got creamed when their earnings came out, but they've come right back. And so I think Wall Street is probably, maybe some of the bigger banks are probably trying to buy right now. I mean, they can't be that dumb, but they don't want to come out and start recommending them, because they want to buy what they can first before they start telling their customers. In fact, I mean, it's not even considered insider trading. I mean, you could just buy, they buy for their own accounts, and then they're probably going to whisper in the ear of their better accounts, hey, you should get some gold, before they come out and officially start raising the ratings and putting them in their model portfolios.
Yeah, do a little front.
Let me just answer that quickly. I think you mentioned specifically Agnico, but if Agnico, which is one of the top 3 gold miners in the world, and has overtaken Barrick now, but if we think the major gold mining stocks could double in the next 12 months, once North American interest starts pouring in, and a double is normal. Let's not forget that. When we say these stocks could double, that's normal when you start to get people moving in. I mentioned in 2008, it was in 6 months that the XAU doubled. Well, then we're looking at a $200 price on Agnico. Let's not forget that Agnico today, despite it trading at record highs, its valuation is still in its lowest decile in its entire 40-year history. And normally, of course, when the price of gold moves up, you get multiple expansion, not multiple contraction. But when you've got the best gold mining company in the world trading at very close to its all-time low valuations, it could easily double, easily. That's not an aggressive prediction.
Gotcha.
And if you look at a chart, it's really just broken out of the overhead resistance going back to 2010, 11, 2020.
Yeah.
And I remember I bought my first shares of Agnico Eagle. I wish I had known it was the best gold company in the world back then. But I remember they had a big fly. And I saw the stock way down, and it was just under $10 a share. So I bought 10,000 shares, my first 10,000 shares, for just under 100 grand. Wow. I still have those 10,000 shares. I have more Agnico Eagle now then, but I wish I'd have bought more when I bought those, because that 100 grand is worth $1 million. That's been pretty good.
Yeah, yeah.
Plus, it's paid some dividends.
So Leonard's got a question I think is kind of juicy. It says, if the derivatives bubble bursts, biggest bubble of them all, what would the impact be on commodities and especially precious metals?
Well, I mean, I don't know. I mean, obviously, any kind of, I think, financial crisis or problem that for the banks, and to the extent they're involved in these counterparties, and anything like that, anything that calls into question solvency that may precipitate a government bailout, all that's great for gold, because it just means that claims to are the question. People want real things that aren't somebody else's liability, that don't have the counterparty. Generate inflation, print more money, cut interest rates, all that's great for gold.
Yeah. And inflation or deflation, regardless of where that scenario plays out, gold has a role to play.
Yeah, look, even if everything goes down, gold will go down less.
Yes,
So
exactly.
on a relative basis, you're still better off, right? The things that you want to buy, the other assets, the real estate, the stocks, will all be cheaper, even if your gold goes down. If your gold goes down 20% and everything else goes down 50, 60, 70%, you're better off. You know, even if it goes down.
Right.
Froze up a little bit there, but I think we got your point. Gold's going to go down slower. If everything's going down, gold's still going to be a better bet, even if it falls, because it'll fall less. Switch gears. I've got a couple questions on auditing gold in Fort Knox, et cetera, West Point, Denver. So the first one is, will there be a real audit of the U.S. government national gold stockpile at Fort Knox, West Point, et cetera? That's one question. The other one related, I just want to dig it up here if you bear with me. How definitive, if they have one, how definitive does an audit of the U.S. gold need to be in order to restore complete faith in its unencumbered existence? So one, do you think we'll have one? And two, how definitive does that has to be? I think it has to all be there. So,
I don't know.
Restore my faith.
They're talking about it. They're talking about going down there.
Yeah.
But I don't know, Stephen Mnuchin, I hear him interviewed. He says, look, I was down there. It was all there. I mean, did he actually, count it? Did he just, or they did?
Obviously not.
And he took the room and he saw a bunch of gold and he figured that was it. Right? But no, we actually need to send an independent audit team in there to actually go over every single bar in that vault and check the serial numbers and test them and check the purity and make sure it's actually there. I don't know if that's going to happen. The question is all the gold there, or has it secretly been sold? I mean, to me, it seems like if there was gold sold, about it. I don't know how they've all.
We're freezing up there, Peter.
It's also possible that some of the gold wasn't sold. Maybe it was loaned out.
Yeah.
And so they don't have it there, but they lent it.
Right.
And the question is, will they get it back? Yeah.
Yeah, I think somebody would know if metal was leaving the premises, somehow, some way, et cetera. I still think it's much ado about nothing. I think it's really a pain in the butt to inventory gold. If anybody that's done it, I'm sure everybody on this call has done it at one point or another. It is no fun, but it must be done.
Well, it's done. I mean, there are private vaults that hold gold that have auditors come in there and they check it.
We're going to start doing that again. That would restore faith. Just doing
now, it was obviously very important to audit our gold when we were still on a gold standard, and all of our Federal Reserve notes were actually IOUs for it was a promise to pay. The government said, hey, if you have $35, we will give you an ounce of gold. That they actually had it. It was the reason we went off the gold standard because now. There's no way that. So it'd be the last one stuck with the money. So everybody started taking their Federal Reserve notes and getting their gold. And that's when we just started losing all this gold
Right.
because the world didn't trust us anymore.
Right.
And they were right not to trust us
Why
because we
should they?
clearly didn't have enough gold.
Right.
We were running these huge deficits, and we were fighting the war in Vietnam and the war on poverty, and we were sending missiles to the moon, and we were running these deficits. And they're like, well, shit, there's no way they got enough gold. Well, I mean, what we were doing then pales in comparison to what we're doing now.
Sure.
Those deficits were tiny. Of the 1960s, the guns and butter. I mean, we got so many more guns and butter now than we had back then.
And, in some ways, I mean, I believe the gold is most likely there. But in some ways, it almost doesn't matter. I mean, if we go there and there's no gold or not enough gold, to me, that's incredibly bullish for gold.
Of course,
the US,
because it
yeah,
means there's and it means that and it's very bearish for the dollar because there's nothing backing it up.
of course. And on the other hand, if the gold is there, that doesn't exactly restore my faith in the federal government.
No, and everybody
tied
already
to-
assumes it's there. It's not like the gold prices run up because we're sure the gold's not there. So
Sure.
if the gold isn't there, it would be a major shock. And it would also be a major scandal. It would expose huge fraud on the part of the government.
I'm pretty sure it is there because, if it wasn't there, Trump would be making a big deal about it by now.
Well, has he been down there? Does he know? I mean, I thought they were going to do like a live thing on X, kind of like Geraldo Rivera going into Al Capone's safe.
That's exactly what they should do. So, there's a question here from John. He says, just changing gears, are you short anything right now?
Good question.
Well, I mean, by definition, I'm short the dollar, with all my anti-dollar investments. I'm kind of short the whole financial system.
Okay, but are you actually short any stocks or short NASDAQ?
I'm short stocks, or I mean, I'm obviously whenever there's a big drop, I'm like shit, I just shorted it,
Yeah.
But the market keeps finding ways to go higher. So I'd rather buy the things that I think are cheap than sell what I think is expensive. I don't buy what I think is expensive, but I'd rather just keep buying what I know is cheap.
Gotcha.
And I think there's a lot more upside. When you short a stock, even if it goes to zero, you just double your money, right? I mean, because the most you can make is 100%, right? So if I short a stock at 100 and it goes to zero, I make 100. Well, if I buy a gold stock, right, at 10 and it goes to 30, I triple my money. I don't just double. I start with 10. So I'd rather buy something cheap and have unlimited upside than short what's expensive, I mean, the way you make a lot of money on the short is you get levered up or you buy put options but then of course you time it wrong, you lose everything. So
Cool. Yeah.
I've got a question here. This is different from anything we've touched on, other than it deals with mining. What do you think of uranium and uranium miners? Any thoughts there?
I've gone bullish and bearish on uranium. I'm long-term bullish on it still, but every time it gets like overly saturated with speculators and small investors and people thinking, I still think that it's crowded. I still think there's a lot of people in it that need to get flushed out again. It's like been a boom bust kind of thing. But I think long term we're going to have more nuclear, and I think it's going to go up. But I still think there's a lot of people in those uranium ETFs and in some of these uranium stocks, and now it also got caught up in the AI trade, because the data centers and they're going to build
That's
their
how
own
they're going to power it all. Yeah.
So
Right.
I think it's a little crowded, and so I'd rather be in the precious metals. And I think oil is still very cheap. So a lot of the oil stocks, are cheap. And in fact, with oil this cheap, it does, in order for the nuclear play, I think we need a lot more expensive oil in order to get more push to nuclear. When oil is this cheap, you want to use oil.
Yeah.
Because it is cheap.
Yeah.
As much as they want to claim, Trump is like drill, baby, drill. We're not going to drill, baby, drill. It's $67 oil.
Yeah.
Money. The U.S. The U.S. is a high cost producer. We produce a lot of oil, but it ain't cheap.
Gotcha.
Yeah.
Adrian, you have one you want to read, or I've got.
Well, we're getting close to the end. I was just going to say on uranium, there's one other factor that I think has played into the recent decline. The recent decline in spot. There's been no decline in long-term contracts, but the decline in spot, I think, has been partly caused by President Trump talking about his desire for denuclearization. And so if you did have denuclearization, that would get a lot of uranium, which is highly enriched in warheads, into that.
Oh yeah, if
uranium for sale.
yeah, if we repurpose those warheads, because I remember for a while, a lot of the Russian uranium from their missiles was being harvested, and that was keeping a lid on the uranium price, years ago.
And I think there might be a concern about that. Yeah.
Yeah.
Okay.
Rich?
Yeah, I've just got one last one. I think it's a good one to kind of end on. We're not going to get to everybody's questions here because we're still going to break off in about 5 minutes or so. But I forget who it was, but somebody was asking about conferences. Are there any that you would recommend? I know we all attend conferences where any you want to highlight that are worth attending on an annual basis. And specifically, I think either the same person or another was asking about, are there any conferences that actually highlight the major gold miners? And I think, Adrian, you may have just come from one. I'm not sure.
Yeah, no, absolutely. There's two conferences during the year which highlight the senior stocks in the US. Now, there's some in London and South Africa, but in the US, or North America, I should say, because Canada's not a 51st state yet. So
not yet, maybe never.
There's a PDAC conference in beautiful, freezing Toronto at the beginning of March. I just came back from that. And that has pretty much every company in the world. But the seniors don't stand up and make presentations. They talk about, different geologic trends and different. So it's not the kind of conference that this person's thinking of. The juniors will stand up and give presentations. And then in the other part of in September in Denver, there's the Denver Gold Forum, but that is invitation only for money managers and brokers and so on. I think you're probably able to get recordings of that and go online. But with regard to, so that answers a question about where all of the senior miners are.
Yeah.
In my view, if you're looking for great conferences that do focus on the mining sector, I think Rick Rule's conference in Boca. You haven't been at that yet, Peter, have you? We should get.
He's never invited me.
Well, we should get you there.
Yeah.
So Rick Rule has a great conference in Boca in sunny, very hot Boca Raton.
The opposite of Toronto in March.
In July, yeah, you take it.
Although chances are, I could be traveling. I'm usually July's a vacation month. A lot of times we're in Europe or someplace.
That's right. You were in Europe last time because he did want you last time. So that's an excellent conference. It doesn't have all of them, but you get a lot of people like Bob Friedland, Ross Beatty, Bob Quartermain. These people are there just wandering around and they're freely available. Yeah. That's a great conference. And then, of course, the New Orleans conference in November, end of October, beginning of November. That's another great conference.
All right. Well, maybe I'll go to one. But hey, guys, I got to drop off because I got a conference call right at 8:30.
Right.
No worries, Peter. Before you go, just any last thoughts? And if people want to get a hold of you, what's the best way to do that?
Yeah, well, I do my podcast at Peter Schiff Show. Do usually 2 a week is normal. So you can listen at schiffradio.com on my YouTube channel. Follow me on X. Got over 1.1 million followers. I do a lot of posting there. We've got a new newsletter, a free newsletter that you can subscribe to at schiffsovereign.com. We're putting out a lot of good content. You should also take a look at some of the premium content that we also offer in addition to the free letter. And look into our funds at Euro Pacific Asset Management. Adrian manages the gold fund. I think I've never seen better fundamentals, technicals, anything for these stocks. I mean, the potential I think is just unreal. you know, in this fund, and obviously not just our fund, but I'm partial to the job of picking these stocks. And so I think that, you know, you have, you know, we've already built the portfolio. And so you can learn about all of our funds at Europac.com's website, EUROPAC.com. There's a no-load version of the Gold Fund, EPGIX. It's on every discount brokerage platform, so you can buy it there. If you don't have an account at all, you can even buy the fund directly on the Europac website. You can talk to the representatives at Europac.com. We have separately managed accounts as well in the mining sector that Adrian manages, but also, you know, we manage portfolios that are not really mining, just good value dividend paying stocks, which are doing great this year. I said our dividend payer fund is up about 15% on the year, and it's not even the end of the first quarter. And it's doing that, you know, with the US market going down. And these are, you know, dividend paying stocks, you know, lower risk, low beta companies that have been on nobody's radar for years because everybody's been chasing momentum. And now that people are trying to get out of those positions, and you know, people are rediscovering fundamentals and value. And so we have great portfolios of and I think what's going to make them even better is the falling dollar. Now you make money as the stock goes up, you make money as the dollar goes down, and you make money on the dividends. So you have three sources of gains. And I think people will realize all three in the current market. But anyway, that's it. I got to run. I'm already a minute late for my my call. And these are
Thank
lawyers.
you so much,
so
Peter.
Thanks
Thanks so much.
All right,
Good
take
luck.
care, everybody.
Bye-bye.
Okay, thanks.
Adrian, I'm not going to let you go just yet, though. I think you want to make a big announcement and let everybody know who we're going to have next. I'm thinking milkshakes.
Oh yeah, Brent Johnson is our next guest, and that's going to be a fabulous, fabulous discussion. Brent is a great guy. Anyone who knows him knows he's a great guy, and very thoughtful, a very deep thinker, and it's going to be a fascinating conversation.
Have we set on the date yet?
We do have a date. Do you know it? Let me while you finish, I'll look at the date. It's
All
in
right.
May. I'll look at the date while you're talking.
Gotcha.
Okay. It's the 14th.
There you go.
May the 14th.
At 7 p.m. Eastern time. So same time, same bat channel.
Same time, same place.
Looking forward to that. Hope you all join us for that. Adrian, how can folks get a hold of you?
Well, it's adrianday.com.
All right.
That's easy.
Yeah, and you know how to get a hold of us, info@assetstrategies.com, 800-831-000710, better than James Bond. And don't forget, the offer here is you buy a qualifying purchase, so 1 ounce of gold, 1 ounce of platinum, 1 ounce of palladium, or 100 ounces of silver. Do any of those things, and you're going to get free shipping, handling, insurance. We're trying to encourage you to do the right thing. Getting in this market is the right thing, because the best way to you know, take care of your future is to keep what's yours, and that's by buying gold and some silver.
Right.
So,
And Rich's office will send out the email tomorrow where we'll have links to people's services. So the things that Peter does, will have links.
all right. And
Okay.
I know we got off to a rough start, but I can't imagine that you think that we did not cover a lot of ground. We covered a lot of ground tonight. So thank you, Adrian. Thank you, Peter. Thank you all for attending, and we look forward to our next webinar in May.
Thank you so much.
Bye now.